Hello fellow traders everywhere, Adam Hewison here, co-founder of Market Club with your weekend market update for the trading week ending March 9th. Well, it's a pretty interesting week. We had some ups and downs, of course we'd expect that, but Tuesday was the big day last week when the markets fell dramatically on the Greek problems or European problems, and we ended up the week sort of mixed. The equity markets, or some equity markets, well, rather than say anything, let's go to the charts and take a look. So here we are, we're looking at the S&P 500. And one thing is the weekly chart, the one thing that stands out in my mind is the fact that we have had a very flat week. If you look at how we closed the week, this is like a doji line right here. So we did close the week up on a very slight gain of 0.09%. That's barely changed for the week. With a couple of things that's coming, we can definitely have to watch. This is the 1340 area. So 1340, very key area, and also just below that there's a parabolic, that's a PSAR, which is one of the indicators we use, and that would say if we go below this area, which I would say right around the 1330 area, it would be not a good sign for this particular index. But look at the index, it is mixed. The monthly's up, the weekly is down, and the daily is up. So you've got the 65 score indicating a trading range right now in this index. So I think that's the important thing to look at. Obviously, if we take out and go to new highs, then we're off to the races. But the trend generally looks like it wants to be higher, but we are, based on our trade triangle score, in a trading range. So let's go to our next market, and that's going to be the Dow, I believe. Let's take a quick look. Here's the Dow, and the Dow actually has closed down 2 weeks in a row. Very sort of imperceptible moves, but nonetheless we have been down. We're down this week almost 0.5% in the Dow. We're in a plus 65, indicating a trading range at the top of the Donchian channel. Not a big deal, but I think we could possibly see this market come down a little bit. I think the action, we've had 2 down weeks. That's the first time we've seen that happen since the market started moving up, and I think it's definitely worthwhile looking at. Even though we came back up and closed towards the highs of the week, if we open lower on Monday and we see more pressure coming into the day, building up, I think we'll see this market have the correction that a lot of people are looking for. But nonetheless, you're looking at a situation where you have the PSAR is above the market right now, so that's a little bit negative. You also have the fact that we've had these sort of doji lines right here and here. I'm a little bit skeptical about this market going dramatically higher from here. So here we have a mixed bag, 65, a trading range, so I think that's the type of market that we're into right now. So going into the next market, which is the Nasdaq. The Nasdaq actually closed a new high, so you can't be negative on this, but it's still in a trading range, and of course that's the important thing. This has been the strongest, without question, the strongest index you can see we've had from our original buy point on the weekly on January 3rd at 2,639. This market has never had a down week, which is pretty remarkable when you consider it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. It's about due for a down week, I think, based on nothing goes up forever. That's how markets work. So let's go to some of the other markets we're looking at, and we're looking at next market is going to be spot silver. Spot silver really has not performed well. We have a plus 55 as a trading range. You can see we moved out of the Donchian trading channel right here, closed lower for the week. It looks to me as though this market's going to be choppy for a while and to the downside. I think for the moment, longer term, our trade triangles are positive on silver, but for the short term, I think we're going to see this market mixed to lower. So plus 55 is a trading indication, and that would indicate that we're going to go sideways to lower. So let's see how the next market looks, and that's going to be gold, of course. That's the big one everyone likes to watch. And gold actually closed practically flat for the week, 0.06% gain. I think after last week's big down week, and the fact that we do have a minus 85, we have 2 of our 3 trade triangles in a negative mode, I think this market's going to be hard-pressed to move much higher than we are right now. So let's see how this works out. But I think generally speaking, next week will be mixed to lower. I think any kind of rallies from this level will be met with some selling support, because I think if you look at where we've been, and we could come back to, we're sort of getting back into Fibonacci ratios that would be worth selling. So let's go to our next market, and that's going to be the copper. Copper closed lower for the week. Actually was down 1.33%, indicating that we are in somewhat of a little bit of a negative for copper, but generally speaking, the trend is your friend. The long-term trend in copper, based on our monthly trade triangle, is positive. Weekly is negative, daily positive. So I think the takeaway here is more of a trading range. In the short term, as you can see, for the last 6 weeks, we've been going sideways. Really no strong upward trend or downward trend, but I think the market's beginning to consolidate to go higher. That's the takeaway we have here. So going back to our portfolio, crude oil closed higher for the week, closed just barely higher, 0.72% on the April contract. But nonetheless, we have a plus 100. The trend is clearly your friend. This level now, the 104.50, the 105 area, key support. And if we scope this out even further, you've seen me draw this before. And let me just take the triangles off here. You can see, if we look at this market, just, let me put that here, put my telestrator back on. If we just look at this market on a weekly basis, you can see we've got we've got the base here, right here. It's the breakout. We just consolidated a little bit around here. So the 104.50 to 105 area, definitely key support here. You would not want to see the market come down below this level, in my opinion. So the risk is not that great on the downside. I think the risk is on the upside, and we're targeting the 120 to 125 area as a target zone on crude oil. This is, again, this is a very, very large base and what we call an energy field. No pun intended, but this is a lot of power underneath this market. And if we get just the slightest hint of any problems with Israel and Iran, I think this could be off to the races with this market. So let's see how that plays out. And let's go to our next market. And let's just clear the screen here. And the next market we're going to be looking at is going to be, let's see here. Let's get a little more data on there, 1 year data, and you can see that's obviously that's also the USO, that's the ETF, same pattern, same bullishness. This past week is the key week to look at. The lows there were 39.91. We shouldn't go below there, so you've got about a $2 risk, and you've gotten maybe about, well, from here about $9. So it's a pretty good risk-reward ratio on that market. So let's go to our next market, and that's going to be the Eurodollar. The Eurodollar really looks like it put in a top last week, and you can see, let me just illustrate that. We are plus 50, which is a trading range, but this is what we see here in the Eurodollar, is the fact that we had this sort of made the lows right here just outside. We had the rally, and you can see the lows we got on the weekly chart to 130.72, right around here. And then here we get to the midpoint of the Donchian trade channel, turn back down. I would say this low that we saw this past week is the key. If we go below that low this week, coming week here, I think it's probably going to be all over for this market. I think we'll see this market trade down and make new lows. So generally speaking, if you look at the way this market's been going, it's sort of like boom, 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 boom. I think that's going to be key. However, it's important to notice we are in a trading range, so we have mixed signals. We have the monthly, which is down, and the weekly, which is up, and the daily, which is up. So you've got this sort of plus 50, which is a trading range. You also have the MACD crossed over, indicating a potential turn to the upside. So it's a little bit of a mixed picture as indicated in the trading range. So let's go to our next market, and that's going to be, just 1 second, that's going to be the dollar index. Much the same picture there. That looks like it wants to go higher, indicating a stronger dollar. You can see we made the turn over the PSAR, the parabolic, and we've had the pullback to the midpoint of the channel. It looks to me like we're going to see this going higher, and of course that would equate to a lower euro. We are a plus 90, which means a stronger trend. Now this is a basket of currencies. This is the dollar index against about 14 currencies. So looks good to us on the upside, and we'll keep you informed, of course, on that trend. Looking at our next market, and that's going to be the Reuters Jeffries Index. We thought this was going to be stronger than it really became, but our monthly kicked in at 323. We're currently trading at 317, a little bit lower than that, but generally speaking, it indicates that it appears to us that we've got inflation coming down the line here. Of course, if we move over the highs that we saw here, which is right around the 328 area, 326 areas rather, then I think we're off to the races, and we'll see this market continually go higher. We are still pretty much in a low rate, and if you look at this back several years, you can see, well, we've been all the way up here, which is when we had gasoline at $140 a barrel, and we've come back here. But generally speaking, if you look at this sort of trend, and I'll put my telestrator on here, it just appears to us that we're sort of seeing, we've seen the lows here, we've seen a high here, here's a higher low moving up like that, and then there's a higher high moving up like that, and this is a low here. So the lows are getting higher and the highs are getting higher. So I think we're going to see this next move certainly to the 350, 360 area in the interim, but you can see once we get into these modes, they tend to stay for a number of months. You can see right here, you're going from 2009 to 2010, almost a year up, and you're going from July of 2010 to, let's say, June of 2011. So I think here you're looking, if this is in fact the low right around here, we'd be looking for this market to go higher probably until October of next year, so October of 2012. So this looks to me like the trend is going to be up. You do have a plus 70, which is an emerging trend. So we think that's going to be really a key thing here, so to the upside. So anyway, it looks like this market wants to go higher. So this is our wrap for the trading week ending March 9th. Have a great weekend, and I look forward to talking to you and seeing you on Monday. So all the best.